All right. Good morning, everyone. Dan here with tradingology.com and the traded room for May 11th, 2021, getting the doors opened up. We will welcome back our partner in crime from Strong Market Team. Dave is joining us once again. Good to see you, Dave. Happy Tuesday morning to you.
Happy Tuesday.
You made it through the weekend?
Barely. I got a second COVID shot. Kind of knocked me off my feet Sunday and Monday. But I'm back to normal.
Very nice.
So,
Well, good to hear you're better.
Yeah, absolutely.
Not so much good news as the market, as the internals are some of the lowest readings we've seen in a long time. We opened up negative 2,500 just about, and we had a little move up, but it's right back down there again.
Yeah, kind of interesting because that has not happened in a very long time, especially once we cross back over that minus 2,000 to go to minus 1,900. It usually keeps going up. Instead, this time it dipped back down.
Yeah, so we see volume's been started negative, made the little push up, but same thing. It's definitely coming in weak, just like it started yesterday. We had noticed it was kind of trugging along just barely above the positive. And it's like they flipped a switch here in the afternoon. And it just started stair-stepping down, then it leveled off, and just the big sell-off that everybody probably saw over the at the end of the day there. And we're starting off about the same now. Level, and now we're stair-stepping down.
Yeah, we're stair-stepping down on everything. We don't have a true trend day, which I've been kind of like really waiting for. I really want one of those true trend days, but it looks negative. It looks very, very, it looks like a lot of sellers are stepping in at this point. We're down about 563 on the YM contract. A couple of geopolitical things, right? The Colonial Pipeline got hit from over the weekend.
Yep, the ransomware attack, locking up their computers.
Yeah, that's serious stuff because that pipeline kind of feeds the entire eastern seaboard in the south on the United States. That's a strategic hit, I believe. And a lot of some of the commentators I've heard on CNBC are attributing it to people who hackers in the maybe not Russia or maybe close to Russia, but at least protected by Russia, possibly. So, interesting. And then we've got Israel attacking and Hamas, going back and forth with some missile strikes. Not good stuff.
Yeah, we're back to crazy town again for that different things. Yeah, and they're breaking news. Yeah, we're over 500 points now we've dropped on the Dow. And the Russell was the huge one too. I don't have that on my normal charts, but that was one of the biggest gap downs I've seen in a while. Let me flip this guy over just to look at the rut.
Yeah, even the Dow Cash Index, huge gap down, and it didn't fill. It didn't fill today anyway, but we'll see what happens later on. But we have a very big gap down on the cash index.
This one's dialing in. Here we go. Zoom this guy in a little. Tom says 30 degrees and 3 inches of snow on the ground. Whoever stole spring, please return it. Sorry, Tom. But at least it'll probably be gone in 2 days or a day, I would imagine, for you.
My son lived just south of Boulder. I went to visit him, was it 2 years ago? I think it was 2 years ago now. And it was like late September. Yeah, they had snow on the ground too. It seems like they always have snow on the ground.
Yeah, you get that mountain effect, right? Good times. I must have been looking at the futures chart for the gap down because that doesn't look like what I was seeing earlier. So yeah, we got definitely a bigger gap. NASDAQ's the biggest one for sure. Here's the one that I found interesting too, was that 50 moving average was kind of holding that support. Yeah. Well, we definitely broke that and dropped well below it.
Wow. Yeah. So when that happens, typically it doesn't look like they don't want anybody to get in short. The market makers see this heavy sell orders coming in on the NASDAQ. They will open it lower, below that 50, because they don't want anybody getting in. It's just, there is no opportunity there because they they don't want to take the other side of that trade.
Right.
There's too many sellers. They don't want to be buyers there.
And I'm noticing right now, just within the first 5 minutes, we've already doubled this negative strength indicator on the NYSE. We're down at negative 44 right now. That's a huge number for strength.
It is. That's a very big number for strength.
I am kind of surprised that our SD numbers aren't over 10, but it's getting there in a hurry. We started out about a -5, but it's been increasing as well.
Yeah. Yeah, I think we've got a little bit of rocky period here for the markets. What concerns me the most, though, if you take a look at that Dow Cash Index chart, big gap down, did not get filled. That's probably even bigger than the NDX. You gotta, typically the Dow does not gap lower like that. It gapped higher. Remember that one day, there was one day a few months ago where we gapped higher by 1,000 points. Remember that day? Didn't fill that one either. I don't think we did not fill that one. I don't think. I don't know if you can get back there.
See if I can find that one or not.
Yeah, that was quite a while ago. I remember that day. I said, it's going to fill that gap. No, didn't fill the gap.
Getting back into my crossroads here. Yeah, I don't recall what day it was off the top of my head. There's a small one here, but that's obviously not it.
No, that wasn't it. It was 1,000 point gap higher.
Oof.
And it never got filled. So I'm wondering, is this gap going to get filled? Kind of too early to tell. We'll see.
Well, interesting, as it hit 35,000 for the first time too, and made an all-time high, then it does this massive gap down. So we've already lost, it's almost 1,000 points in 2 days.
Yeah. We hit it and then boom, we got killed. So yeah, interesting stuff. We got some geopolitical stuff going on. We got we got this. Of course, nobody anticipates when these things are going to happen. They think it comes out of nowhere, but we've been watching this thing for weeks. Hey, look, we've been bearish really since going into the fall, and now we're kind of into the spring, and it went way higher, I think, than anybody could have imagined. Is this the end of the bull market? Who knows? But we got to pull back today.
Well, and we did notice yesterday, or Friday, I think it was, the SPY VIX indicator that we're always talking about that it hit 25 a little while ago. Well, it just hit 25 for a second time.
Yes, that's another thing too. If you're a long-term investor or even a short-term investor who wants to look at long-term indicators to kind of get an idea of when the market sentiment is going to change, that SPY VIX indicator that we use is one of the more reliable ones. You can see what happened last February. We went over it, kind of dipped, then kind of came back very, very close to that 25 level again. And then we just kind of sold right off from there. And we did the exact same thing, almost picture perfect repeat.
Yeah, and so the question now is going to be, is how far is it going to drop? I put this up here long time ago. I put this back up here in like February. I drew this correlation. Is it going to go through it? Is it going to trail around it? We'll see. It seems like it's been avoiding it magically.
Yeah.
I still don't quite understand how that's happening.
The market knew you drew that.
The market's literally watching my screen. So maybe you should wait till the middle of June, and then it's really going to come down, because then it'll be past it.
Yeah, definitely.
If that happens, then I don't know what I would do.
Yeah. So we got a lot of stuff going on in the market right now. Very volatile trading. So really be careful out there. We opened down down pretty significantly. All the indexes, we kind of rallied back up on the ES. YM a little bit, not as much. The Russell really took off. Boy, it hit a double bottom and then it just zoomed about 40, 50 points.
We look at what they're running into, though. They're hitting these pivot lines from persons indicators, hitting the moving averages. It's pretty interesting where they stop and make turns.
Yep.
And we got lows on 2 of the 4, so halfway. And we're now the diamonds are below the lower pivot, which is a rare occurrence. We'll see if that holds and it comes back with a little bit of support or not, but that's not looking good for the diamonds.
Yeah, I also have a support level at that 34.037 on the YM, which it is hitting right now.
We should take a peek at some of the other ones real quick. Well, the market's doing this. The other trade that we've been looking at obviously is around commodities. So, and everyone's always curious about crypto. So let me take a quick peek at those charts and see how this is affecting Bitcoin and everybody else. Because as you were mentioning yesterday, it's just very similar to another risk asset, right? And did you see that dive Ethereum took?
Yeah, I mean, you're talking. I was watching XLM. You mentioned Ethereum, and I didn't realize how far Ethereum had fallen from yesterday. But XLM hit. I mean, it was down 20% during the day. It went down 10% in like 20 minutes.
I'll pull up XLM down here.
It was a pretty dramatic sell-off. I think it was like 74 or something, and it went to
yeah, look at that.
I mean, yeah, it was like 70. No, it's over 74 at the height of the day, and then in about 20 minutes, it dropped about 10% real quick.
Yeah, it went from 3/4 down to 20% down, just about.
Yeah, that was a pretty steep drop. At Ethereum, I mean, everything was down. We're back up on most of the crypto today, so it's not following stocks. But we'll see. It did follow yesterday.
XRP's barely green. We got Bitcoin's got a red candle, so we'll see. It's bounced down to 55. It's having a hard time getting through. We can't get back through 60 right now. 58 was a big level. Everybody was watching.
Mm-hmm.
But yeah, looking at that,
we're not getting new highs. That's for sure. We're kind of bouncing along sideways here, at least for now.
Let's take a peek at. I'll make this not maximized. Here we go. Commodities continue to jump up above, heading for that target up here around 42.75. Little pullback today, but had a big week last week, that's for sure.
Well,
commodities are looking good there.
Yeah, commodities are just on fire. It's unbelievable.
30-year yields are on the rise again, so we're up, getting close to 2.4. We'll see if that continues. And our Dixie is down a little bit.
Yeah, kind of disappointing. We haven't seen a flight into the dollar yet, but it could be the strength of commodities. I'm not really sure. I'm kind of expecting a little bit of a pullback in commodities, but hasn't happened.
Yeah, it still hasn't happened.
No.
An update on the Dixie there, and the new target is we have made a retracement all the way back to this 0.86. So the new target is now 93. So that has been reduced because it's been a deeper pullback. So back to where it was previously. We'll see if it breaks this 89.63, then this sequence is off and we will readjust.
Yeah. Yeah, it's kind of disappointing. Actually, if we haven't made a new low on it, so we still have higher lows. But if we do, target's probably going to be around 88.
Well, interesting if you look at how this is kind of expanding since it started in 2021. Like you say, higher high, higher low, higher high, higher low, higher high. This is still a higher low. Well, compared to that one, it's not. So we're sideways now. But yeah, I notice how it's expanding bigger. Like each swing's a little bit bigger. So what happens if this swing is also bigger and we get up into 95, 94? Right. It all depends on when this thing makes a bottom and takes a swing high.
Yeah, that whole pattern right there could be just a big bottoming pattern. I mean, it's kind of hard to tell right now. We really need to see some pretty strong movement on the DXY higher before we can kind of see that. But
for that to happen, yep. So this is the key level that we're watching on that is 89,683 here. If it breaks that, then this one is null and void.
Yeah, we'll see what happens there. But certain commodities have really had a very, very large run. one of the more interesting ratios that I've seen recently is the ratio between the Dow and the commodity index. And that is at an all-time high so stock prices in terms of commodities going all the way back to 1900.
Wow.
Which means that stocks have outperformed commodities at record levels, which we just hit in 2021. And so if that reverses, it indicates that stocks are going down, commodities are going to rise. And so that inflation trade that everybody's been worried about could be much worse and much larger than anybody thinks. We're down 673, 680 on the YM futures.
Yeah, the YM's hitting this very bottom pivot. We'll see if it finds any support or not, or if it cuts right through. But these are huge numbers on the price signals index. 500 almost here when we opened up.
Yep. Yeah, those are big.
And looking at the internals, if you haven't seen it yourself, we are officially over negative 2,500 now. So that's the first time it's broken that on the day. So we're got to squeeze these in, and the lines are fairly close. I mean, I was starting to wonder when this happened. It's like, man, this might not be real if our volume isn't coming through, but the volume is definitely following suit now. And if we look just shortly at, I drew that one line, we had one dip below it. But look at the VIX is shot right back up. Huge gap up on the VIX there today. I was going to see if I could do a Dow minus USCI. Wonder if I could chart that you were just talking about.
Oh yeah. If you do, I don't know if you'd be able to get the same thing because it's the ratio, kind of like what we do with the SPY VIX ratio
versus just the raw.
Yeah, versus the raw data, because the raw data is going to be pretty weird looking. Because I think USCI, what's the price on USCI now?
Right now it's at 40.85.
Yeah, see, if you subtract 40 from the Dow, which is at 34,086.
Yeah, it's not right. That's true.
That's not going to work. You need the ratio. But yeah, definitely, it is at a high. There's a. In fact, I have a chart here I can show you, and I will put it into the Slack channel, and you can pull it up.
Well, I actually hadn't had a chance to open that. Sorry, guys.
But this is kind of what I'm looking at. So I will put it into the RTUS channel.
Look at that bounce off that bottom line there.
Yeah, I know. I have a short on NYM too. I put the order in to close it out when it hit 33,965, and it didn't take.
It's so close.
I didn't get hit. I'll hold on to it for a little while. Yeah, there it is right there. So you should see it in the RTS. There you go. So that's stocks in terms of commodities going all the way back to 1900. And you can see it's hitting that upper trend line. It's the highest level it's been.
Wow.
In 120 years. So what that means is that stocks have outperformed commodities to such an extent that it's likely in 120 years, we're going to have some sort of reversal in stocks and a resurgence in commodities if that goes down.
So the magic is what's the ratio from stocks versus commodities that people would want to potentially position themselves? Similar to like the gold silver index, right? And we always look at that. If it's above this, you want to buy one and sell the other. It's all a matter of, so if you're looking at, shorting the Dow and going long CRB in this indicator where that'll be the magic is how much, is the Dow going to drop more? Or is the commodities going to rise to meet it? Or is it a little bit of both?
Well, the next ratio, I'm going to take the formula that we use for the SPY VIX, and I'm going to do it for stocks and commodities.
Got it.
So we'll be able to tell. We should have it pretty good. But if you look at the second top there, it says top, and then the one before that right there, that would probably be a good level of support for this ratio to come to.
for this drop back down. Sure.
So right around 70, maybe 65, 70 in that area.
Yep.
Yeah.
I can zoom in even closer. There we go.
Yeah, probably around 60, 65, something around.
Yeah, I like it. Very good one. All right. You guys are awfully quiet this morning. Good to see you though. Kyle and Mark also joined us. Yeah, we've been talking about it last week. It's the market knew, but it just wanted to wait. We're always a couple days early, right? When I shorted the entire market, then took small profits first, and then it rallied back up, and now it's dropping all the way back down again.
Yeah, it's just crazy market. You know, we had 42.11 or no?
Yep.
Was that
That was another area too. I was thinking about that yesterday because I was moving a line. That's about where this started again. 42.18. It was up to, it was like 42.30, but yeah, it was right around that 4,200 was where it began the big drop at the end of the day. 42.16-ish.
Well, the question is, what makes today's market different than what we've seen over the last, 6 months or a year? Is it any different, or is this a pullback that you should be buying? Is this a dip that people should jump into? Kind of too hard to tell. I would look at the bounces. So wherever we end up today, if we're still down at the end of the day, look at the bounces and see if the bounces get sold off. If the bounces get sold off and they can't hold, then we're in a different kind of market than we've been in the last year. If people come in and buy the dip and we start to rally and then we have some shallow pullbacks and we keep going higher and higher, then we're in the same market that we've been in. If not, we don't close these gaps, especially on the Dow and the NDX. We don't close those, or the bounce looks very weak on low volume, that's typically a sign that we're in a downward trending market now. And the trend is everything. When the trend is up, you can buy those dips on low volume pullbacks. And if we get low volume rallies now, it's the opposite. And we should sell the rallies, not financial advice.
Exactly. And looking at just from where we talked earlier, now we're reduced to a negative 26. So that strength indicator is lessening. We only have on the daily chart one column filling in on the BOP for the balance of power, which is odd with that big of a move. I mean, we should have more hurting to the downside if we're over 500 points down in the Dow.
Right.
So that's one thing we're watching too. Like the NDX, look at this, we're full. It's 125. Right. That looks much more normal, but this is only negative 1 and 6. So yeah, we're missing the 6 column over here.
Right.
But that's one thing I kind of keep an eye on too, is is this going to continue? We'll see. Or like you say, yeah, is maybe Powell's going to have a quick meeting and we'll be back to all-time highs before the end of the day. Anything's possible in this market.
Is he talking this week?
Let me look at the calendar quick. I haven't seen. Last week was a lot of other members. Oh yeah, there's actually, look at this. Tuesday, May 11th. They got 4 of them talking today. Everybody but Powell.
Wow.
Federal budget balance tomorrow. Couple more speakers. Let's see. I don't see Powell on the list anywhere, but yeah, definitely a lot of FOMC members speaking. Unemployment claims, just for a quick lookout, is 485 is the forecast. So we'll be watching for that on Thursday. They keep talking about all these new jobs being made everywhere and records for the new presidency, and everywhere you go is, there's help wanted signs and no one's taking these jobs. So we'll see. That's an interesting one too, to watch what's available and what's being filled. With that, I think we're getting close to the top of the hour. So if you guys have any final questions, we'll probably wrap her for Tuesday and come back on Thursday and see you then. And as always, we will be in the Slack room, or the different Slack rooms, answering questions live. And we'd like to welcome some of our new members that did take advantage of the sale. So good to see you guys here. Thanks, Tom. Appreciate it. Tom says good session. So we always enjoy Tom coming out with us, and we hope your snow melts soon, sir. I'll send you some heat.
Absolutely. Always good to see Tom. Yeah, those 70s, that 70 revival, better not come back, Tom, with the leisure suits and the white slip-on loafers and all that kind of stuff. I don't think, it's not a good look. We're all trying to stay alive.
Exactly.
But one thing I do want to mention before we go, though, is if this is a change in trend of the market, just everybody be careful out there. Volatility is increasing. We'll see if it continues or not. But I appreciate Dan sending me some good weather this week. We have, we've got, looks like we're on 70-degree weather coming in tomorrow through Sunday.
It's going to be consistent. Yep. We're starting to plateau in the 60s and 70s. So sorry to rub it in, Tom, but
beautiful.
We get some here.
Yeah.
Yeah. Just to mention quick, I know we talked about this a few weeks ago. Again, not financial advice, just some things that we're, protecting our portfolios. We do have some shares on the reverse ETFs. I did just notice the SQQQ is positive now.
Ooh, wow.
By $1, but it's still positive.
Well, yeah, I mean, hey, we got to be thankful for something, right?
And, compared to where it was earlier, it's actually moved about a decent amount. So it's up. I should just deal in percentages versus dollars, but yeah, it's up today a good couple percent, that's for sure.
Yeah. All right, everybody stay safe and trade carefully, but we'll see what happens going forward. Certainly 1 or 2 days does not make a trend. So we'll keep you in touch and let you know what's going on, what we're thinking.
Yep, be nimble and watch those levels, and we'll see you on Thursday.
Yeah, Tom, if you want warmer weather, you're going to have to move east of Minnesota. Stay safe, guys.
Take it easy, guys.